Hey, happy Friday. Boy, I'm having a great time doing this real estate series, the series for investors, people that are serious about building their empire. Now's the time to be planning, right? Planning to build the empire. We're about 41 days, 42 days from 2024. So what are we going to do today, right now, to start preparing for what is going to be the greatest 2024 of your life? I think it is to build a fortress around yourself, your family, your finances. When you're in unsure times, when you're in a down economy, whatever it may be, this is one way that you can take control of your finances, your wealth, your portfolio. So something I get asked about a lot, and you guys hear me talk about appreciation and depreciation. So today I want to kind of break down real estate depreciation. Now, I'm going to put a disclaimer out there. I'm not a CPA. I'm not a financial planner. Everything I'm telling you guys is the world according to Lisa. These are strategies that I use personally. So if you find anything that's interesting and you think, oh, I'm going to deploy that, I just want to tell you guys and gals, talk to your CPA, get it blessed. But I just want to give you some things that I think are important and why I talk about depreciation so much when it comes to building your investment portfolio, right? If you do it the right way, that's the best way not to pay a lot of federal income tax. All right, so number one, I'm going to give you 6 to 7 reasons why depreciation is a win if you're a real estate investor. And it really is a driving force as to why you want to diversify your portfolio and find something that you can depreciate. So number one, it's tax savings. And so that just allows investors to deduct a portion of the property's value from their taxable income every year. So easy numbers. You have $100,000 income and you're able to take a $50,000 depreciation. You immediately have dropped your taxable income from $100,000 to $50,000. That doesn't stink. Now, again, these are just completely made up numbers, but I think you can kind of do the math on them. So, it'll result in lower, in lower taxes, lower tax liabilities, and just substantial tax savings. I have friends, I'm not quite there yet myself, but I've got friends that are multi-millionaires and clients. They literally don't pay any income tax. They pay very little income tax. Why? It's not because they're criminals. It's because they have built the proper fortress empire of investment properties, whether it's multifamily, single family, it doesn't matter, right? I mean, anything that has a structure on it can be depreciated. So just so y'all know, the structure, the home, the asset can be depreciated, but the land can't. That's why I'm not a big land person. I am if you're a developer, but when it comes to real estate investing for normal humans like you and me who are watching this, my followers, it's best to find something with a structure on it because the structure, the home, is the asset that gets depreciated. Over 27.5 years, you can do accelerated depreciation. Again, I'm not a tax attorney. I'm just giving you strategies that I have done and my husband have done over the years. All right, so you get improved cash flow when you take depreciation. Why? By reducing your taxable income, depreciation can enhance the cash flow that you generate, right? So investors have more funds available to cover things like operating expenses, right? The less tax that you pay on something, that increases your cash flow. So typically, let's say you have $1,000 rent and you've got a $500 payment. Again, easy numbers. That's $500. So that's $500 of profit that you would pay, right? But if you've got depreciation, you would reduce that 500 by even more. Hence, not paying as much tax. All right. So wealth preservation, depreciation helps you preserve wealth over time. As the property value depreciates, for tax purposes, investors can potentially defer capital gains taxes when they eventually sell the property. Now, one of the things I love about deferring capital gains is a 1031 exchange, right? So you're able to take the gain, the profit from the property, and then roll it into your next investment. And that's good if you don't need to cash it out. You just keep rolling the money. You take the profit, you put it in the next one. You don't pay cash. And so you're always kind of one step ahead of the tax man. Now, there is a day of reckoning on a 1031 exchange. Of course there is. Just like there's a day of reckoning with an IRA or, anything like that, right? There's a day you have to pay taxes. But that day is in hopes, if you build a strong investment portfolio, that day comes when we are older, much older, and we've got a decreased tax liability, and then you pay taxes at that decreased rate, not at the rate that we're clipping at today. Okay. Um, risk mitigation. Oh my God, I do make up my own words sometimes, y'all. Mitigation. Real estate investors can take on significant financial risks, but depreciation helps you migrate some of the risks, right? There have been properties over the years, investment properties that I've purchased, and I think, well, I want to get this one. It's a good cash flow property. It may not be exactly the price I want to buy it for today. It's a little bit high, but I like the cash flow. And if I like the cash flow, I'm willing to pay a little more for the property because I know that I'm going to be able to take the depreciation off of my income. Right. So, that's just, it's such a driver for me on what I buy. So I don't even look, this is me personally. I'm not a CPA, but I am your real estate expert. So I don't look as much at the price I pay. I mean, I do, don't get me wrong, but I don't mind paying a little bit more if I can justify it with cash flow and depreciation. And sometimes I can justify it with cash flow, depreciation, and appreciation because I can look at the trend in that area and I can say, over the last 5 years, these properties seem to have appreciated, right? Gained value of 13%. So, I can depreciate it this much. It will appreciate this much. So I don't mind paying 5% more for that property to get into the deal, right? I hope that makes sense. You guys, if you've got any questions, throw your questions into the comments, or if you guys have had any successful appreciation, depreciation. But I'll tell you, I mean, it's really one of the best ways to beat the tax man. You can depreciate an airplane. I don't have one of those yet. I don't have a jet yet, but you can depreciate a jet. You can depreciate a car if you're in business, and real estate. So mine is having to buy a car, and a car's got a 5-year kickback in. So anyways, I digress. Real estate is the way to go. If you want to lower your tax liability, you've got to get into the real estate game. You've got to get a good CPA. I've got a great CPA who understands real estate depreciation. You've got to have a great realtor that you can talk to, you can strategize, that you can kind of look at the deal before you get into the deal. We can do all of that. Portfolio diversification. Depreciation benefits can make real estate more attractive option, promoting portfolio diversification. Investors can balance their investment portfolios by including income generating assets. I told you guys a few days ago the story of there's a couple stocks that I'm really heavy in, like 6-figure heavy. That's heavy. And over the last few weeks, months, let's just say months, I mean, tech has taken a beating. Now, that's nothing I can control, right? I can't control if this company or that company, they're taking a beating and now all of a sudden my stock, but I've got one right now it has dropped over half in I'm going to say 8 weeks, 50%. Now, there will never be a day, never, ever, 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 that's going to happen to you in real estate. If we get you into a real estate deal or you get into a real estate deal, you're not going to buy it on a Tuesday and then in 60 days look at the appraised value and it's dropped that much, unless you buy it in a war zone or something. But that's not going to happen. Real estate will never disappoint you if you're in it for the long game, if you're in it for the marathon, right? It's not a sprint. You want to get in, you want to get out, you want to get into house flipping. I don't hate it. Obviously, my business partner, Tarek El Moussa, is one of the most successful flippers on the planet. He's built his empire flipping, but you have risk with flipping houses. You think you buy it right. You have the inspections done, you get in there and it's like, whoa, there is more to this house than I thought there was. You might lose your crew. You might have a hard time finding a crew. We could have a pandemic hit overnight, and then all of a sudden, cost of goods goes crazy, supply chain management. Lumber went from, $1 a board to $4 a board or whatever the number was, but it was about that much of an increase during the pandemic, like stuff you can't control. Whereas if I bought a house during the pandemic and maybe I paid a little much too much for it, okay, it happens, guys. None of us could have predicted what happened in March of 2020, but you can hold that asset long enough that the appreciation will catch up. It will. So for those of you out there that bought homes in 20 and 21 and you're like, oh my gosh, I don't think it's worth what I paid for it. You're good. It's not a car. It's not a car, so don't worry about it. It will come back. This is a long game, and it may come back at 12% a year, or at 15% a year, or if you're in Central Austin, or in a really really fast moving area, sometimes we see 18% a year in appreciation. So don't lose any sleep over it. But when you're on a flip, you're typically on short financing. You've either paid cash or you've gotten a hard money loan or something, right? The clock is ticking when you're on a flip, right? So time is money. And so this is me personally, I've done a couple flips. It's not for me personally, just telling y'all. I like to play the long game. And a long game for me isn't as long as you think it is. A long game for me is about 5 years. If I can hold something for 5 years, then I know I'm going to make my money back. I'm going to do accelerated depreciation. So I'm going to get a big fat tax savings. I'm going to appreciate anywhere from 8%, which I wouldn't buy something at 8%. I'll be honest. 10 or 12%. If I can see that we're going to have that kind of appreciation, or we've had it in the past, data doesn't lie, then the asset doesn't scare me. It doesn't. I think, okay, cool. On a $100,000 house, I'm going to make $50,000 after 5 years. Okay, easy numbers, right? 10% a year, which 10% is a little low, just so you know, but 10% a year. So I'm going to hold that asset for 5 years. I bought it for 100. I'm going to sell it for 150 in 5 years. I made $50,000. Okay, I collected rent, right? On a $50,000, on a $100,000 house, rents about $1 to $1.25 a square foot. Just giving you guys some of my thoughts. So let's just say I got $1,000 in rent. Okay, so I made $50,000 in rent in 5 years. I made $50,000 in appreciation, which to me is free money. I feel like you earn the rent, right? The rent, the rent services the debt. It'll service the taxes. It'll service if you've got a mortgage on it. So let's just say of the $50,000 in rent that I made, let's just say 20,000 of that's profit. I had to service everything else for 30,000. So I made 50,000 in appreciation. I made $20,000 in profit. Okay, that's $70,000 in 5 years. And then I took a depreciation, right? I depreciated it. So I probably saved, you're going to get me lying here, but I probably saved at least $5,000 a year on federal income tax. Maybe, I don't know. Let's just say 5. So 5 times 5 is 25. So, that $100,000 investment. So let's just say that was 25 and 20. That's 45 plus 50. God, I'm good today. I went to Morgan Wallen last night and I'm doing good. So let's just say I made $95,000 total, all in my taxes, the profit on my rent, and the appreciation. That's $95,000 in 5 years I made for a $100,000 investment. So I doubled my money. Ish, pretty close. Okay. And the numbers I'm giving you are pretty good. They really are. If you don't think they are, put it in the comments, but they're pretty sane numbers. All right. I'm a little riskier than that. So I would probably go for a little bit sexier, a little more risky real estate, something with the upside of a bigger return. But like, how do you double your money in 5 years safely, secured by an asset, secured by real estate? Y'all, God is not making any more dirt. Okay, so the dirt you see in your town, in your city, in your state, whatever, that's it. That's the dirt. Okay, so if you're working with a savvy real estate agent, you're working with savvy people that can advise you. I mean, I think I'm savvy. I think my team's savvy. We train them on this all the time. It's a great investment. And I've got friends And you know who my friends are who have become billionaires because of real estate. I was at Grant and Elena Cardone's house about 3 years ago. Grant and I are sitting, I'm going to post the video today. Grant and I were sitting on the back porch. It was probably 2.5 years ago. And we were sitting on the back porch of their place in Golden Beach. They had just bought it. It was the Tommy Hilfiger house. And it was just me, Grant, Elena, and I think Ryan was there. Anyways, and we were back there, and the Cardones had just come on to my real estate team. And Grant and I were having a glass of champagne together, and we were toasting. And I said, Grant, when did you get so far ahead of me? Because remember, guys, I met Grant Cardone when he walked into my car dealership. It wasn't even my dealership at the time. I was just working there. That was before I had a dealership. And he said, I love to quote, I love to like imitate him, when I got into real estate. And I was like, yep. I mean, he went from successful guy to billionaire, like in about, when did I meet him? 11. He got into real estate in about 12, 15, 10 years. Like it wasn't a like, oh, hey, overnight, I'm a billionaire in real estate, but he deployed many of these strategies that I am telling you all about right now. Okay. If you follow him, he is the king of depreciation, right? He doesn't like to pay taxes. Nobody likes to pay taxes. This is a legal way around the taxes. All right. Is to own an asset and claim the depreciation. The legalest way in the world. Like, why do we want to pay all of our money in taxes? So I absolutely love depreciation. That is my favorite part about the whole real estate process. But I think I've made a good case for $100,000 property, a 5-year hold. I don't want to tell you to hold it for 5 minutes or 5 months. And I get people call me all the time. They're like, hey, find me a deal that's cheap. Well, there are no cheap deals. Okay. I'm just telling y'all right now, nobody's desperate. The bottom's not falling out. Have we had a correction? Yep. We've definitely had a correction, but we've only had a correction from pandemic, scarcity, lack of inventory, supply and demand. Okay. This is just like, okay, now inventory has settled off. We have enough inventory. So now we have enough inventory and a little bit more than enough inventory for the buyer demand today because of these interest rates. So anyways, I hope all this makes sense. I'm making these videos. They're good for me. They're a great reminder for me that I just need to stay at the game. I need to always be looking for deals. I look for deals for my clients all the time. I look for deals for myself. I want every one of you who follow me, who take the time to watch these videos and give me comments. Thank you. First of all, I've heard from so many of you the last week since I decided to make a daily video, and I appreciate it. I appreciate like your confidence in me, and several of you have said I'm going to get into the game. I just needed to hear this, Lisa. So I hope you needed to hear this, and I'm going to be making a lot more videos because it is a complicated process in the fact that you've got to work with somebody who understands the process. They've got to understand the pricing of the asset. Like what should you acquire the asset for? And I'm going to tell y'all something you probably don't want to hear, but like my number is 2019 pricing. So if we can go back to MLS and kind of see what that asset was worth in 2019, that's kind of the number. Just is. Not in every case. So don't go out there and say, not in every case, but it's probably not the number it was worth in December of 2020, right? When we're in the middle of a pandemic and an absolute scarcity of real estate, right? Supply and demand. It isn't worth what it was worth then. And at the end of the day, something is worth what you're willing to pay for it. And have I paid too much for stuff over the years? Yeah, but kind of intentionally because I see the upside to it. I see the cash flow. I see the opportunity for depreciation. And then I look at the 5-year game plan. And that's what I would want you to talk to your realtor or me about if you're working with me or anybody on my team. Hey, Lisa, what's this thing going to be worth in 5 years? Now, I don't have a crystal ball. I can't tell you for sure, but I can tell you what the average appreciation for that asset in that area has been over the last 5 years. And we can average that because again, you can throw out the numbers on 2020 and about halfway into 2021, that was just insanity. So, it's a science. I love the science. Like, I have never had more fun. I love digging into the numbers. I love being able to go and show people, okay, here's what it was, here's what it is, here's what you can make, here's the appreciation, here's the depreciation. And in 5 years, I'm going to wrap up this whole thing in a bow. In 5 years, my prediction, okay, and anything can happen in 5 years, but my best educated guess, and that's all we can do as real estate professionals, is the asset will be worth this. You will have claimed this in depreciation. Therefore, you would have saved this in federal income tax, and you would have cash flowed this. Hope that helps. I hope that brings some clarity. I got so much more to share with you guys and gals. I love this. I love it. I'm having a lot of fun with it. I love helping investors, and I just want to help you build your empire in 2024. You're worth it. Your family's worth it. And you have got to build a financial fortress that can sustain a hit. All right, guys. Peace out. I'll see you soon.